Yep.
All right, well, good morning, everyone. Thank you very much for joining us. This is another edition of our weekly real estate backstory. My name is Alan Richardson. I'm the managing broker here at Maximum Realty and Realtor Partners.
My name is Richardson. I'm the compliance broker for Maximum One Realty and Realtor Partners.
And we are very glad that you joined us today. If we don't get a chance to see you before the
Christmas
holidays, I'll go ahead
Isn't he
and
cute?
suit up here. So Merry Christmas. We love you. We appreciate you. And if we can ever be of any service, please let us know. We pray that your Christmas is the best one ever. I know there's been a lot of challenges and a lot of folks are ready to be over with 2020, but we just want to wish you a very Merry Christmas. So I'll
Absolutely.
stop donning the cheesy hat.
But you look good at it.
Well,
you look good in it.
So long as you think I look good, that's all that really matters to me. So, all right, we're gonna kind of jump into being prepared for 2021. It's gonna be one of the main topics we talk about today. But we're also, first we got to get through some of the normal news kind of thing. So first up, we have 2 CE classes this week before Christmas kicks in, and because we are excellent at planning, we put both of our classes exactly the same day at the same time. So tomorrow at 9:30, we have 2021 GAR contract changes by my own lovely bride, Ming Richardson, and at the same time, Dana Sparks, the managing broker at Maximum One Greater Atlanta, is also teaching the same class at the same time. So you get to choose which one of these wonderful ladies that you would like to take your GAR contract changes. And there's a lot of really cool stuff this year, too.
There are a lot.
Yeah,
so.
yeah. I mean, you want to give us a quick overview? Or?
Well, a couple of the new forms came out due to the fact that we are having more buyer's remorse, where when the inspection comes out and people decide this is too much to take on, and then a couple of days change their mind. And so GAR actually came out with a form to rescind the TNR. So, and also we renamed a couple of things. Instead of saying selling broker, it is now, listing broker, it is selling broker. And for buyers, it's buyer broker. So
buyers and sellers,
yeah,
which makes so much common sense. We've never really used common sense a lot in real estate. So that's pretty helpful.
So a couple HOA changes once again, and a couple other forms. So I think they also lead base, going over that as well.
All right. So, well, we look forward to your class tomorrow.
Thank you.
All right, let's jump into how's December looking. And right now, December is looking like we are going to break more records this year. So the housing market recovery index has kind of gone off the charts. We are seeing more traffic in December than we have really long since we've been in the business kind of thing. And we're old and crusty. So I'm old and crusty. She's not. But for being around a while, it really is kind of the best December that we're ever seeing, even though normally this time of year we're seeing a lot of transactions decline and the number and the volume and that kind of stuff. It is still rocking and rolling kind of thing.
Yes, it has.
So our November numbers came in, and home sales surged. Home sales were up 23% in November from November of 2019. 2019 was a good year for November also. And so we kind of blew that out of the water. So we are really, really rocking and rolling that. At the same time, decline in homes for sale hit a record low. So the number of homes on the market right now is at an all-time low. We have less homes on the market than we've ever had, like as long as we've been tracking numbers. So the good news on that is we have more new listings coming on the market than we did last year. So overall, we have a lot less. But right now, we're starting to see a slight tick in inventory. And goodness gracious, do we need it? So that's
well,
really.
And also know a lot of people, due to holiday and COVID issues, they're waiting until after Christmas before they put a house on the market because the interruptions and everything else.
Honestly, we're expecting January to just be bonkers the way that the 2020 is wrapping up. We're heading into, we're not seeing the market lose any steam. We'll talk more about that too. So also time on market November fell, which is bonkers as well, because normally this time of year, and you can see on here national trends every year kind of thing, time on market normally shoots up during, November, December, and even January kind of thing. Time on market tends to go higher. People are out shopping and all this other kind of stuff. But boy, you can see that this year, Psych, not happening. So
Some more houses are under contract quicker
Yep.
Than they stay on the market.
Yep. So on the mortgage front, mortgage rates hit another low. As if we weren't tired of hearing that again. So for the 14th time this year, mortgage rates have dropped. Where are they at now, man?
2.67%, y'all.
2.6. Okay.
Yeah, that's incredible.
When it hit 2.9, 2.99, I was like, this is nuts. And now it just keeps going down, down, down. So it is kind of crazy, but also we'll take it. So no telling where that's really gonna end up going. We do have some predictions we'll be going over a little bit later here and how that's looking, kind of thing. Overall mortgage purchase applications last week, purchases were up 2%, applications were up 1%, and refis were up 1%. And that's all from the week prior. Actually, refis are up 105% from last year.
Well, who wouldn't want to take advantage of low rate?
Well, absolutely.
I would.
Yeah, no kidding. But also, in addition to refis, purchase applications are up 26% over last year. So at the same time, that's partly why we're seeing the lenders kind of running a little bit crazy right now. So at the same time, the Fed met last week, and they decided that basically inflation is not really hitting; it's staying at about 2%, and they've committed to keep buying bonds back until we get an employment back back in line, kind of thing. So that's really leading us to kind of with them buying that many bonds, mortgage rates follow the 10-year treasury so closely that it really is looking to keep going along that line. On the negative side there, we've seen that how long the mortgages or the loans are taking to actually get to closing. That's getting longer. Yeah.
About 2 months from
right
time
now
under contract to closing. And it's because lenders are really backed up. Right now, all the underwriters are just swamped. And with holiday season and time off, it just make it nearly impossible for them to get through all the files diligently.
Yeah, and I mean, our lenders and our attorneys both are prioritizing purchases over refis. But when you have a 105% increase in refis, that's just a lot of demand on that industry right now. And so while I'm glad that they're all busy, that's great news for them. I'm super stoked for them. On the other hand, we got to get this our timing is really, really slow. So that means that we really got to be ahead of the game here. We got to have our ducks in a row in order to get the closing on time. So VA loans, also we got some new record numbers in for VA loans. VA loans hit we had more VA loans this year than we ever have. Matter of fact, VA
10% of your loan application right now are VA. So on the average, they're way less than that. But because now that the VA fundings are good and their interest rate is great with zero down, I mean everybody's taking advantage of it.
Well, but that 10% number is one that really stands out to me. That means that 1 out of every 10 of your buyers is probably going to be a VA buyer. So so we've got and knowing how to work VA loans, how to work with VA buyers, we need to take care of our military. It's a great opportunity for us to build business and also take care of some very loyal clients, kind of thing.
Absolutely.
All right.
And we thank them for their service.
Yes, very much. So on the negative side, jobless claims shot up again. It's our highest level in 3 months. That's kind of indicative of what's kind of going on with
COVID
right now. There's another jump in COVID. There's a lot of employment, or not just employment restrictions, but restrictions overall. Maybe not so much here in Georgia, but in several other states.
Absolutely.
They've kind of initiated a lot more lockdowns. And so nationwide, those numbers are probably higher as a percentage than we are necessarily here in Georgia. But last week, initial jobless claims were 885,000. We're kind of inching back up towards that $1 million number, and that's kind of scary. Real estate is doing really, really well, but we know that if we sustain high unemployment, that cannot keep going. Kind of thing. So also we got some other information that 45% of consumers say that if their bosses will allow them to continue to remote work, then they are ready to move. Now, the whole thing is, where does remote work end up in the wash? We know that the vaccines are coming,
right.
and what's really going to be dictated by the vaccines is still very unknown as far as how all that goes. So the challenge is that we're starting to see some numbers come in from large employers that are showing productivity levels that have dropped from remote work.
Well, originally when COVID first hit, where people are working from home, they're actually do more
it went up,
than they would at work. But I think, as you have no direction to a certain extent,
well, I mean, we're seeing after 3 months of working from home that there is kind of, overall, there's a national trend that's showing productivity levels on remote work is not holding. Now it's a little bit different industry to industry, but that's going to be kind of an interesting factor leading into next year is as more companies either go back to the office or opt to stay on remote work. These are more potential buyers we have moving into the market as well, kind of thing. So that's pretty interesting because a lot of folks are ready to move, but they're not exactly sure what's going on with their work, with the bosses, that kind of thing. So, all right, home builder confidence dropped last month. It had been going up for 3 straight months. We had 3 straight months where home builder confidence was the highest ever. We just kept going up, 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 up. And it did drop a little bit. And main reason that it dropped, and I'm kind of glad, and it sounds weird, but builders are worried that buyers are getting sticker shock. And I can tell you from being in business, they are. We're seeing where new home prices are continuing to inch up, up, up. Now, I know that labor yes, but also softwood prices are continuing to increase. They went down for a little bit. Now they're coming back up again. So we're still having supply demand issues on the lumber prices for the builders. So there is some legitimate costs that are going up. But in my humble opinion, some of that has been a little bit aggressive on that side of things. And so we are seeing some sticker shock.
Well, not only sticker shock, but appraisal. They're not coming back where the builder wants it. And, and if you go through the builder office loan mortgage company, the builder kind of know what you have in reserve. And, some they will allow and some they won't when the appraisal price are different.
Yeah. So, the builders, the real challenge for us in truly representing our clients is that for all the builders, they want you to use their lender. If you don't use their lender, you risk your earnest money. Your clients aren't going to get closing costs in a lot of cases. They're not going to get upgrades. So they really have us by the short hairs there. And at the same time, it allows them to kind of get, I don't know if insider information is the right word or not, because it's not supposed to happen. But the builders have a, when they own those lenders, well, own is the wrong word. When they are that closely tied, that for me is a little bit of a concern for our clients on that point, because we do have a few builders that are starting to act a little predatory right now. They have a lot of the inventory and they know that they can kind of squeeze us, and they kind of are.
And at the end of the day, they want to make sure, because if you think about it from their perspective, if they lower the price for that one particular home, the next comp come out, it may be lower. And so they can't maintain that low number mentality at all.
Yep. So also while we're talking about builders and that kind of thing, home flippers have seen some of their highest profits in over 20 years.
Yep.
And so we are seeing where flippers are really in the market, but there's less of them. So, where for years when home prices were really, really soft, for the coming out of 08, up into 2012, 13, that kind of stuff, everyone and their brother was a house flipper, was moving into that market. They were buying really cheap and then fixing up.
Right.
And now our home flippers have kind of moved into, these guys are pretty professionals at it, and they kind of know what they're doing. So your average house flipper right now has been doing it for a while, and is very custom, because if you are a brand new flipper moving into this market, you need to watch out, because there's a big learning curve that goes along with that. And the way prices are right now, it's not the place for wannabe flippers at the moment, kind of thing.
Well, it's just that they don't take what ifs, because sometimes, even though you may have a bid, a subcontractor is exactly what they are. They're subcontractors. If they have other things that prioritize over yours, and you might be holding the bag for a couple months, and that costs money.
Mm-hmm. All right, I got good news. It's going to sound crazy, but single family rents are going up. And I know that sounds completely bonkers to say, hey, that's good news. But really what that means is that our home affordability to purchase homes is continuing to outshine the rental market right now.
Absolutely.
Even, and it's kind of funny that during a time of COVID and all this other kind of stuff, that single family rents continue to move up, even in town. We were seeing a softening earlier this year, but now they're back up. So right now, single family rents are up between 4 and 5% from where they were a year ago. But with where mortgage rates are right now, home affordability is so much better for homeowners. Even with price increases, for purchasers, home affordability is much better than renting, by about 26% on average. So yeah, rents are increasing. I'm sorry, rents are increasing. Yeah, not really, but it's one of those things like and if you're a realtor and you're renting, hey, look, this is your industry. You need to go buy a house. That's how we build value or wealth in the U.S.
It's about education. If you would just have a very solid client consultation, excuse me. Yeah. And but when you educate your client, they appreciate that, and they allow them to make an informed decision, and also make the best decision based on what they have.
All right, the Smarter Agent app, which is also the Maximum One app, has decided that they are going. Well,
they sold out.
Well, Keller Williams owns them, and so they have stopped letting anybody else in the industry buy their product, kind of thing. So, and that it's actually a pretty big deal, because 1 out of 4 realtors in the United States has a Smarter Agent app, and so yes, it is definitely going to affect us. We are going to be changing to a new app at some point, but we have 6 months to do it. So it's not like it's an overnight thing, but just know that our apps are going to be changing. Actually, for a lot of brokerages, it's going to be changing. 1 out of 4 brokerages is probably going to be changing their new mobile apps here in the next several months coming up. So just kind of heads up there. Also, in the local area, United Real Estate has merged with Virtual Properties. Now, don't expect to see anything on the
name side of it.
Yeah, exactly.
It's
more of a merger, and it allows United Real Estate to really kind of grow. But it's going to be kind of a long process. So if you are a Virtual Properties agent, I doubt you're going to see a whole lot from the outside, kind of thing. And for most of the industry, we're still going to continue to see Virtual Properties there as a separate entity. But do know that is going to be slowly transitioning over time, kind of thing. Excuse me. So let's jump into 2021 predictions. So Redfin is, Redfin for us here is not nearly the same competitor that, say, Zillow and Opendoor and OfferPad is, but Redfin's doing that. But on the other hand, Redfin is a huge aggregator of real estate data. And so they gather a ton of real estate information. They come out with 10 predictions for 2021. And we kind of want to run over those, because some of those we agree with, and some we're like, maybe, we'll see. So we just kind of want to run through those. And so the very first one is that mortgage rates are going to remain historically low at about 3%. And we agree. We think that they're going to be in that 2.5 to 3.5 point for the next year, maybe 2. Kind of thing is how everything is really looking on that one. So the second one is that there will be more home sales than any year since 2006. And that's great for us. And we see the same thing going. We have continued on the brokerage level to keep setting records, and we don't see any reasons that's slowing. The only caveat that they're saying that they feel is that price growth.
Right, the price is going to slow down just a little bit, which I think they will, because they're appraisal. Because honestly, the appraisal kind of controls to a certain extent. But the market also demands what it's going to be.
Yep. Prediction 3.
There'll be more new home built than any year since 2006, and
Yeah.
we're seeing right now PVC farms, and I know that a lot of developers are developing right now, and a lot of builder are actually under contract before they even start the first brick foundation.
Yeah, but now one of the things we want to point out here is that when you hear like nothing, it hasn't been this good since 2006. Well, we all remember what happened. That 2006, when you think 2006, you think bubble.
Mm-hmm.
We're not in a bubble, folks. Okay, we've been making babies faster than we've been making houses, so we need to make houses, kind of thing. And so that's a really good thing for us. We're kind of excited to see that. Their fourth prediction is that the number of Americans relocating will be the highest in 16 years. And for us here in Atlanta, that's a really great thing because we don't have the hurricane issues. We have the second highest number of government jobs in the entire United States after Washington, D.C. And so, we have great affordability. There's just so, and our unemployment keeps trending lower than the national averages. So these are really good things for us to have more folks relocating into Atlanta, kind of thing.
So number 5, the homeownership rate will reach 70% for the first time since 2005.
Boy, that's great news. Okay,
Mm-hmm.
and honestly, I'm very optimistic to actually see this happen, and we want to see this happen and kind of across the board. One of the reasons why Atlanta in particular has the home ownership rate in the African American community has been lower than other demographics, kind of things. And so seeing this home ownership rate rise, boy, that's a great thing because wealth in the United States is tied so much to owning your home, kind of thing. Generational wealth, things like that. And so as we see more people move out of rent and move into buy, boy, that's a great place for all of our friends to be at, kind of thing.
So they predict a couple cities like San Antonio, Tucson, and Tampa will be the hottest housing market as major southern cities like Austin, Phoenix, and Miami become unaffordable. Those cities are extremely expensive with COVID and everything else. A lot of them are just kind of getting away from the city and coming down to other areas.
But we're seeing the same thing even in Atlanta. Mm-hmm. One is that Atlanta overall is more affordable than several other cities. But then even in Atlanta proper, what we're seeing is people are moving because of COVID and being able to work at home. People are moving to less expensive suburbs, even right now, kind of thing, like the southern suburbs, and even west and east suburbs are kind of new havens for growth, mainly because the bang for your buck there is so stinking good, kind of thing. Now, to combat that, their seventh prediction is that that the cities are going to invest in culture, lifestyle to try and attract more residents back. And honestly, that's not really a bad thing either. I'm all about having really
reinvesting in the cities. Absolutely.
I think we don't think that the cities are dead by any means. I think there is a little bit of a knee-jerk reaction to COVID and that kind of stuff. And I do think that, the cities are more expensive, but they also have a lot more cool services and venues and whole 9 yards. And so seeing that the cities have to be competitive, I think it's kind of a good thing. I think competition is always good.
Absolutely. And number 8, most home buyers will make an offer on a home sight unseen.
45% of buyers reported they made an offer on a home sight unseen. 45, almost half.
I have one.
Yeah, but the fact, it is a little bit odd right now. And boy, it kind of creates this weird, are you glad or are you not glad? Because as listing agents, do I want blind offers? No, I don't want to take my house off the market for blind offers. On the other hand, especially in the COVID times, that kind of thing, and how quickly homes are going on the market, it's kind of a real challenge. The other side of things is a lot of our buyers are not willing to go look at the home until they get under contract right now.
Right, because they've been disappointed multiple times. There was one point I know an agent wrote about 12 contracts. Every one of them fell, and they seen all 12 of them. So it's is they just want a yay before they get disappointed. But a lot of time when you do sight unseen, it becomes an issue because it's not exactly what the buyer anticipated, especially if the picture doesn't really describe the property.
Yeah. All right. Prediction 9 is that 2021 will usher in a new era of price competition for real estate agents. And I agree, but here's going to be the kicker though, is in past years, I mean, for a long time, when we talked about price competition, it was always with the listing agents.
Mm-hmm.
Well, there's been a new settlement between the Department of Justice and the National Association of Realtors talking about buyer fees and publishing buyer fees. And so now we're going to start seeing what the buyer's commission is posted on most of on pretty much, you're going to see it on all the listings moving forward. And we're going to start seeing competition based on buyer agency. And in the past, buyer agency was just kind of a given, and for a lot of realtors, they didn't really work through having to have a value proposition when you work with buyers. As listing agents, we always had to have that value proposition. This is what we're going to do to earn our money. This is what we do. But I'm not trying to crack on buyer agency, but buyers a lot of time was just kind of taken as a given kind of thing. And we can't do that. We can't take this really passive role because the folks who are going to be driving this, everybody in the industry is trying to shove their hand in our pockets. We felt that on the listing side for years now, but now we're starting to see it on the buyer side. And so we got to be prepared to handle that. And it really comes down to communication. We've got to start talking about what is our value proposition?
Right.
What does that mean? And then really what do we offer for our services kind of thing. So I think that's going to be a very interesting play going into next year. And I agree that that's going to be something next year and beyond that's going to kind of change the way that real estate is done. If you look at how real estate is in other countries, the market, the countries that didn't take this really serious, like there's several countries, like my mom lives in Australia, and over there are no buyer's agents because they let themselves get shut out of the business kind of thing. Right. So for us, we're very concerned about this, and maybe concern's the wrong word, but I think we're very conscientious about making sure that we're showing that the value that we bring to buyers is crucial. And that we earn our money kind of thing.
Well, it also is how it's going to shape the real estate industry, honestly. I think it can potentially wipe out a lot of real estate agents the way it's going right now if we don't educate the public what we do as services for them.
And then their last prediction is that everything associated with buying and selling is going to be offered at one-stop shops. And this is one that we tend to disagree with them. But there has to be a little star asterisk caveat to this because yes, of course, Redfin is going to be like, hey, one-stop shop's really the way to go. Of course, that's the same thing Zillow and Open Door and everything else is saying too, because they're all working into all these different industries. But at the same time, while I don't necessarily agree that everything's one-stop shop, what that does mean for us is that we need to be the information brokers on everything associated with the real estate transactions. We need to have relationships with attorneys and lenders and home inspectors and that kind of stuff to where we can also offer those one-stop shop services because everything kind of comes through the realtor, the agent filter kind of thing. And we can offer those same services and we are knowledgeable and we can guide them through the whole process. I think it's really important.
Sometimes when you have a one-stop shop, there's so many people in different positions. And some buyers just feel so much better if they can deal just with one person versus multiple person have to memorize who those persons are and what their job functionalities are.
Yep. All right. So we are going to kind of wrap up today with being prepared for 2021 and post-pandemic kind of thing. Because I think a lot of folks came into 2020 thinking, whoo, we are so ready to go. And then pop right between the eyes. The pandemic hit kind of thing. So we got to look at really where are we heading into. So first thing is, as things start going back to this new normal kind of thing, don't lose your pandemic drive. Like our industry has really we're leading the economy and helping this rebound right now. We got to keep that drive, keep pushing, keep moving forward, kind of thing. There's going to continue to be a ton of uncertainty. Keep our clients updated. We have to be engaging, informing, educating our clients, and that's one of the biggest things we can always do, because that leads us right into number 3, and that's don't shy away from tough conversations. And you know,
lean on your fellow realtors. There are some really great realtors out there that knows how to deflect or answer a tough questions. Role play with them. Iron sharpens iron. So if you have an accountability partners that you like to talk to or ask some questions, your response and their response, you guys may actually help each other. So go out there and learn. I mean,
yeah, but the other side of that, though, is that sometimes we tend to give these off the cuff, lame answers, kind of thing. I mean, I'm just being real honest here, because you're out in the public, and what's the one big question that always hits us? Like, hey, how's the market? And on one hand, you can do that really simple, easy, like things are great, things are good. I mean, you're not really helping to inform, educate, to do anything to really advance your clients' knowledge or information and yours, kind of thing. So we've got to be ready, be prepared to handle that conversation that comes from, is now a good time to sell? Is now a good time to buy? What's the market doing? Where are property values going to go? We have to use, and that leads me directly into number 4, and that is form your own opinions based on data. We cover data every single week when we do this. And so we hope that you'll join us on our weekly real estate backstory. We're going to strive really hard in the future to keep it to about 20 minutes. And so that you can just kind of get a good start for your day. But you've got to have those numbers. You got to have the data to really be able to make your own opinions about how things are going, and then to be able to articulate that to your clients, and to have those really, well, maybe not really difficult, but necessarily needed and necessary conversations, like you said.
And sometimes a good conversation. So,
yeah.
But anyway, just be prepared for the unexpected, y'all.
Yeah. Okay? To wrap it up,
the only constant is always change, and that's why it makes real estate so much fun to work with.
Yeah, I mean, it never is the same, and we've never had 2 transactions that were identical, and you never will. So, but that being said, how we go into our business is very, very important. A lot of times when you speak to people that have left the business, they'll talk about how the market shifted, how things changed, and they're not going to talk about how they didn't change. And I'm not trying to be mean about, I'm trying to pick on anybody, but talk to folks who left the real estate industry after 08 and 09 and 2010. And they'll talk about how the market was bad and how things were down and how the market changed and how all this, when really realistically what didn't change was them. And like we were here during that time, we did BPOs, we became REO agents. Everyone on the planet was a HUD home specialist, kind of thing.
Yeah.
Markets change, things happen, you adapt your business. And so if you have one business model that you're following right now and the market shifts next year,
you might want to review your business plan. Now's
the time to do it too. So prepare for the unexpected, be ready for uncertainty, and go into it head first. So we love you. Yeah, we appreciate you. If we can be of any kind of service, please let us know. Call, text, smoke signals. We answer it all. I pray that you and your family have a wonderful and Merry Christmas.
And a Happy New Year. Thank you.
Bye, y'all.
Have a great Monday.